The World Trade Organization's new gloomy forecast comes in sharp contrast to the optimism it expressed last fall. Its economists now saying they expect global trade in merchandise to decline by 0.2% this year, down from the previous outlook of a 3% expansion. The dire warning follows a strong year for world trade in 2024, when merchandise trade grew 2.9%. And the WTO is clear about the reason for the reversal: the surge in tariffs and trade policy uncertainty brought on by the United States under President Donald Trump.
Whilst U.S.-China trade accounts for only around 3% of world merchandise trade, a decoupling between the two major economies could have far-reaching consequences. If it were to contribute to a broader fragmentation of the global economy along geopolitical lines into two isolated blocs, our estimates suggest that global real GDP would be lowered by nearly 7% in the long term.
The WTO also warns of the broader economic impact of an ongoing trade war.
Services trade, while not directly subject to tariffs, is also expected to be adversely affected. Declines in goods trade will reduce demand for related services such as transport and logistics, while broader economic uncertainty is expected to dampen demand for travel and investment-related services.
While the U.S. has temporarily lowered its so-called reciprocal tariffs to 10% for most trade partners following turmoil in financial markets, the WTO says policy uncertainty is further undermining trade forecasts, and that the expected reintroduction of the full rates of broader tariffs by the U.S. could lead to the steepest drop in global trade since the height of the pandemic in 2020. Poppy and Puting, CGTN, Washington.